Hey people, I once again welcome you to another video in Caroline's Online Academy. In this series of videos, we are solving the previous year and sample question paper problems from the topic realization account from the chapter Dissolution of Partnership Firms for CBSE Grade 12. Now today I have for you a question from 2023 examination which was asked for 6 marks, and uh, the question requires you to prepare the realization account. Let's go ahead and do this. Adish and Shreyansh were partners in a firm sharing profits and losses in the ratio 3:2 on 31st March 2022. Their balance sheet was as follows. You have the creditors, Mrs. Adish's loan, Shreyansh's loan, general reserve, capitals of Adish and Shreyansh. And then we have cash at bank, stock, investment, debtors, provision for doubtful debts, plant and advertisement suspense account. And in adjustments, we have firm was dissolved on 31st March 2022 on the following terms. Debtors realized, plant realized, Adish promised to pay Mrs. Adish's loan, took away stock, Shreyansh took away half of the investment at a discount of 10%, remaining investments realized 4,500. Creditors were paid off at a discount of 10%, expenses of realization amounted to 7,000. So again, this problem looks like a very simple problem. It's going to give us easy marks. Let's go ahead and do this. This problem is the 50th question in the question bank that I've uploaded on the internet. That is linked to that question bank is given in the description. Okay, so I just copied the format from the previous problem, so I don't have to make it again. Let me just delete all the things that we don't need and remove this border. Taking some time, yeah. So good. So now we are all set. Okay, here we have one more. We are all set. Let's go there. The first thing to do in a realization problem will be to transfer all the assets to the realization account. And when you transfer all the assets, in this question, we also have debtors and provision for doubtful debts. Am I right or not, my dear children? I'll show you how to adjust for that. Okay? First, let's start. The assets that are to be transferred are stock, investment, debtors, and plant. Stock, investment, debtors, and plant. So we'll transfer to stock, to investment account, to plant account, debtors. My computer is suddenly misbehaving. Now it's like suddenly slow and sometimes fast. Know what's happening. I'll have to check that. Anyway, so to stock, debtors, investment, and plant, stock was 24,000. Investment was 30,000. When it comes to debtors, you have this doubt. Should you transfer 20,000 or 18,000? The answer is you should transfer the gross value of debtors and not after deducting the provision for doubtful debts, because provision for doubtful debts has to be transferred along with the liability as it is a liability account. So the gross value of debtors is 20,000. Understood or not, my dear children? You will transfer 20,000 from debtors, and for plant it was 1 lakh. You transfer the book value of the assets. Understood? So that will be 1 lakh. Once you have transferred all this, you add the total of all the assets transferred and write it in the outer column. So that will be what, my dear children? That will be 1,74,000. And then you go ahead and transfer the liabilities. On the liability side, we have all the external liabilities only have to be transferred. And we have creditors and external liability. We have Mrs. Adish's loan. Adish is a partner. So his wife's loan, is that an external liability? Yes, it is an external liability. So it will be transferred. Shreyansh's loan. Shreyansh is a partner. He is given loan. Should it be considered as an external liability? No, it is not an external liability. Although during fundamentals you've learned that when partner gives loan, it will be considered as an external liability, but it ranks below all the third party liabilities. Understood or not? Only the third party liabilities are settled through realization account. So Shreyansh's loan, a partner's loan, will not be settled through realization account. Understood or not, my dear children? So what we have to transfer are creditors for 90,000, Mrs. Adish's loan, and one more thing. I'll give you time to think about what that other thing is. By creditors account, by Mrs. Adish's loan account, and one more thing, my dear children, if you remember, is provision for doubtful debts. I told you while transferring the assets that debtors will be transferred the gross amount and provision for doubtful debts will be transferred along with the liabilities. Understood or not, my dear children? So you might be wondering, like, why didn't we transfer advertisement suspense? Advertisement suspense is not an asset, my dear children. It's an accumulated loss. It will be distributed in the partner's capital account. It will not be transferred to realization account. Understood or not, my dear children? So the creditors amount will be 90,000, 30,000, and 2,000. 90,000 is the book value of creditors. 30,000 is the book value of Mrs. Adish's loan, and 2,000 is the book value of provision for doubtful debts. After transferring the liabilities at their book value, we add them and write it. Understood or not, my dear children? The next thing to do would be to account for the adjustments. You see in the adjustment, they say debtors realize 17,000 and plant realize 10. Realized means what? We actually sold it and got money. Understood or not? So when we sell assets and get money, what happens? Bank account is debited as bank is an asset, and we get money, bank increases and therefore it is debited, and it is an income for the firm, and the income is credited to the only nominal account that is available during dissolution, which is realization account. So the journal entry is bank account debit to realization account. So what we're going to do here is we're going to write by bank. In order to give information of which all assets realize how much, we're going to write them separately. So debtors realize 17,000. Understood or not, my dear children? Now, we also have plant realize 10% more than the book value. Understood or not? So plant's book value is 1 lakh from the balance sheet. Plant realize 10% more than the book value. So 1 lakh into 10% will give you 10,000. So 1 lakh into 10% will give you 10,000. So what plant realized was 1 lakh plus that 10,000. So it is 1 lakh 10,000. Understood? And then we have Adish promised to pay Mrs. Adish's loan and took away stock at 20,000. So the partner, Mr. Adish, is promising to pay Mrs. Adish's loan. He took away a liability and he also took away stock for 20,000. Understood or not, my dear children? First, let's account for him taking over his wife's loan. When we pay a third party liability, the journal entry will be realization account debit to bank account because money goes out of our business. So bank account and asset decreases. So bank account is credited. When we pay liabilities, it's not, it's an expense, it's a loss for us now. So we debit realization account, the only nominal account available. Am I right or not, my dear children? So we'll write 2, but okay, we're not paying, right? Partner is taking. So when the partner is taking over the liability, we are not paying money to the partner. We'll tell him, we'll adjust it in our capital account. Understood or not? The liability towards the partner increases because he took our liability. So now we have to pay that fellow Adish that amount. Understood or not, my dear children? So the journal entry will be realization account debit to partner's capital account. And in this case, it is to Adish's capital account for him taking over the liability of his wife's loan. Understood or not, my dear children? So it will be Mrs. Adish's loan. And that will be how much, my dear children? Mrs. Adish gave a loan of 30,000. You can take the numbers from here also, but I'm taking it from the question just to be sure. Understood? Apart from just taking out the liability of Mrs. Adish's loan, Mr. Adish also took over stock for rupees 20,000 as given in the question. Adish promised to pay Mrs. Adish's loan and took away stock at 20,000. So Adish is taking over stock. When the assets are sold, the journal entry is bank account debit to realization account. So when partner takes over the asset, he will not actually give us money. He will tell us to adjust it in his capital account. And therefore, instead of bank, we are writing Adish's capital account debit to realization account. Understood or not, my dear children? Always under this by bank, leave 2-3 lines and then write in case there are any partner taking over transactions. Understood or not? So by partners capital account, stock, and he took it over for how much, my dear children? 20,000. Why I tell you to leave lines is because in case some other assets are also realized, we can under this itself we can write those things instead of having to write by bank separately again. Understood or not? Third point. Third point is Shreyansh took away half of the investment at a discount of 10%. Remaining investments realized 45,000. Whenever question says that half was taken, this was taken, that was when they divide a particular asset and it is distributed to different people in different manner, I would strongly recommend that you write it separately and analyze it. So 30,000 la half is 15,000 and the remaining half is 15,000. This 15,000 was taken over by Shreyansh at a discount of 10%. So 10% of 15,000 is 1,500. So you reduce it, you get 13,500. And the remaining investment was sold for 4,500 rupees as given in the question. The remaining investment was sold for 4,500 rupees as given in the question. And therefore, my dear children, that for that we have to do the journal entry bank to realization. And when partner takes over investment, partner takes over asset, what is the journal entry? Partners capital account debit to realization. Understood or not, my dear children? So let's go ahead and account for that now. So this will be by who took it over? Shreyansh. Shreyansh's capital account. And within brackets, I will write investments. And that will be how much, my dear children? 13,500 as we just 500 as we just calculated, and then the remaining investments were sold for 4,500 that we'll write under by bank. Okay, so with that we have completed that adjustment, and then we also have creditors who were paid off at a discount of 10%. So creditors have been paid. When you pay liability, what is the journal entry, my dear children? Money goes out of the business. So bank account will be credited. It's a loss. So realization account will be debited. Realization account debit to bank account. To bank account. You can write creditors. And that is how much, my dear children? They're paid at a discount of 10%. So creditors are 90,000. 90,000 like 10% is 81,000. 90,000 minus 10% of 9,000. And expenses of realization amounted to 7,000. That also will be paid by the firm. So realization account, the bank account is a journal entry. So realization expenses 7,000. Understood or not, my dear children? With that, we have adjusted for everything, I believe. But you just cannot go ahead and start tallying it. You have to go to the question and once again check if you have adjusted for everything. Have you realized stock? Yes. Have you realized investment? Yes. Shreyansh took away a certain part of the investment and remaining investment was sold. Debtors, yes. It is given as 17,000. Yes. Plant, yes. We realize all the assets. In case we haven't realized any one particular asset, you have to check if that asset is a tangible asset or an intangible asset. If it is an intangible asset, you have to write it as having realized zero amount, nil value. And if it is a tangible asset, you should write it like it has realized the book value. Understood or not, my dear children? Similarly, you also have to go through the liabilities. Have you realized creditors? Yes, we have paid for creditors. Have you realized Mrs. Adish's loan? Yes, we have realized Mrs. Adish's loan. We have settled Mrs. Adish's loan. It was paid by It was paid by Adish. And with that, we have recognized or we've settled or realized all the assets and liabilities. Now you might wonder, what about provision for doubtful debts? Yeah, provision for doubtful debts will not be paid. It's an internal liability, my dear children, so we don't have to pay anyone anything for that. So with that, we have realized everything. So let's do the total here. The dog in the neighboring house is getting excited. I don't know why he gets excited whenever I'm recording a video teaching a class. Such a, what can I say? There may be dog lovers, they'll feel offended, so I can't say anything about the dog. So yeah, live with it. So by partners, okay, we have to tally. In order to tally, what should you do? You do the debit total and credit total. The debit total is 2,92,000 and the credit total is 2,87,000, which means what, my dear children? Debit side is more, credit side is less, and therefore it is a loss. The loss will be distributed between the partners in their profit sharing ratio. We have Adish, Shreyansh, and the loss of 5,000. 2,92,000 minus 2,87,000 is 5,000. Will be distributed in the profit sharing ratio of 3:2. So 5,000 into 3 by 5 and 5,000 into. Understood or not, my dear children? With that, we have come to the end of this video. I hope you got what we just did. And I hope you've realized the fact that realization account is like as easy as it can get. Understood or not, my dear children? It's very, very simple. Anybody can do this and secure those marks in the examination. Wish you all the best. In case your friends are preparing for board examination or your juniors are looking for some channel to learn the 12th standard syllabus, please do share it with them. Please comment your views under in the comment section. We'll reply to all the comments usually because there is so less, the number of subscribers are so less that it actually is not a difficult thing for us to do. And like the video in case you do like it, so that we get some visibility and more people can benefit from these videos. See you again in the next class with another problem. People take care, have fun, and bye.